Hi everyone, James Barrie from the Cash Management Group at Canaccord Genuity. Before we begin, here's some important information. Globally, Alimentation Couche-Tard owns and operates 14,000 stores, with about 11,000 of those also being fuel providers. The diversification of being both in consumer goods and the oil and gas space has been a successful combination for the company. Many acquisitions and partnerships later, Couche-Tard now primarily operates Circle K, Couche-Tard, Ingo, and holiday stores in 24 countries across the world. On August 30th, Couche-Tard released its latest financial statements, showcasing better than expected results. Here to discuss them and the company is Canaccord Genuity analyst Dley. Thanks for joining us, Derek. Couche-Tard has sustained steady growth since its IPO, even in the turbulent markets over the last couple of months. Can you speak to how the company has strengthened its position, especially in regards to their most recent set of financials?
Yeah, sure. So, their growth has really been focused on a few, what I think are unique pillars. Number one is Couche-Tard early on has taken an approach where they really focused on the in-store side of the merchandising. So the company was one of the first to really start to push out fresh food service. That type of product is very important because one, it's high margin, and two, it drives repeat business into the store. The second thing that is as important for Couche-Tard, and this is very unique to their own company strategy, has been M&A. The company has proven to be excellent when it comes to consolidation and buying really, really strong businesses and integrating them into their network.
How do fluctuating oil prices affect Couche-Tard? And can you tell us about the relationship between fuel cost and the demand to the overall valuation of the company?
Really, really good question. Couche-Tard's fuel margins, which is basically the spread between what they pay from oil and gas refineries to procure their gasoline or diesel and what you and I pay at the pump. That's called the rack forward or the marketing margin. It has an inverse relationship with oil prices, and it's just due to a lag in timing. Wholesale prices adjust about 3 days faster than retail prices.
So how does Couche-Tard stack up against its peers in similar spaces? In your research reports, you've actually compared their valuations to both convenience stores and also grocers.
Yeah, and we think that's the appropriate comp set. Again, given Couche-Tard 67% of their profit comes from the in-store, which is predominantly consumables. From a metric perspective, Casey's does a little bit better in terms of merchandise margin. Couche-Tard would be number 2 in the industry, but then Couche-Tard skews higher on fuel margins, on important metrics, on metrics that we think are really important, like return on invested capital. Couche-Tard is the best in the industry.
Thank you so much for joining us today, Derek. Everybody, like and subscribe to keep up to date with the Cash Management Group and get the latest information from the Canaccord research team.